Hello students, hope you all are well. Let us start our next video on the basis of elements of accounts part 1 of standards 12. All of you know I started the 7th chapter, which is the last chapter of part 1, and I already told you that you are having the 7th chapter from part 1, and all this 7th chapter it is related to the partnership business, partnership firm, and weightage according to that also I have already told. Once again I want to explain the weightage, that also you can write in your textbook like that way which I have written. This is A, section A, section B, section C, section D, section E, section F. Section A is MCQ of 1 marks, section B 1 or 2 line questions of 1 marks, section C that is short type of sum, each questions will give you 3 marks, section D that is also short type of questions, this is very short type of question, this is short type of questions, each will give you 4 marks, section E practical sums, each will give you 8 marks, and section F of 11 marks. Which way I explain it here? The first chapter, only one question from A, there is no question from B, one question from C. That means from first chapter you are getting 1 plus 1, 2 questions. So 1 from A of 1 marks and 1 from C of 3 marks, total 4 marks. Similarly, for the second chapter, that is final account, you will not get any question from A, B, C, D and E. Only you will get from section F of 1 question, that means 11 marks. Similarly, valuations of the goodwill, third chapter, which is 1 from section A, 1 from section B, no question from section C, 1 from section D. 1 from section D means 4 marks. 4 plus 1 plus 1, 5, 6. 4 plus 1 plus 1. So 5, 4, 5, 6. Total you are getting 6 marks. Similarly, the fourth chapter, which is called reconstruction. Reconstruction of the partnership firms, you are getting total 5 marks. In which way you will get 5 marks? No question from section F, no question from section E, no question from section D, only 1 from C, that means 3 marks, plus 1 mark, 4 marks, plus 1 mark, 5 marks. Admissions, I already told 9 marks. Out of that, only 1 you will get from section B, 1 mark, and 1 from section E, 8 marks. So 8 plus 1, 9. Retirement, 1 from A and 1 from E. So E means 8, A means 1, 8 plus 1, 9 marks. And the last one, that is called dissolutions of the partnership firm, you are getting total 8 marks. But which way you will get 8 marks? No question from section D, no question from section E, no question from section F. That means no long questions. These two are the long questions. So 2 questions from section C, 2 means 2 into 3, 6 marks, 6 plus 1, 7 plus 1, 8. So total that way, first chapter 4 marks, second chapter 11 marks, third chapter 6 marks, next 5 marks, next 9 marks, 9 marks, 8 marks, total 52 marks from part 1. And section wise if you get, you will get that section F you will get only 1 question, section E you will get 2 questions, section D you will get 1 question, section C you will get 4 questions, section B you will get 5, and section 4, section A you will get 5. So total 5 plus 4, 9, 9 plus 4, 13, 14, 15, 16, 17, total 17 questions you will get. So let me start the next video. According to your textbook, the chapter 7 was going on. The previous video I explained all the theoretical part. Now this practical side slowly I am entering. I am entering the practical sides, but before doing the practical questions, generally most of the times this chapter journal entry you have to pass in different situations. they will say the different situations, then they will tell you find out the or pass the journal entries. But this video is most important to do the practical sums. I told the 3 marks practical sums you will get. 2 into 3 is equal to 6 marks. And you have to remember the few numbers of journal, which is started from page number 279 or page number 279 till 285. So from page number 279 to and 285, that the few journals are there. These are the journal I am explaining from your textbook, that you try to remember it. But out of this journals, some of the journals already you know it. So let me explain that one by one, the journal entries. Number 1, balance of the accumulated reserve and the undistributed profit. Already several times I told when I taught you the 5th chapter as well as the 6th chapter. What are the journal entries you have to pass for the accumulated reserve or undistributed profit? That is called undistributed profit and accumulated. All of you know. It is where it will be given. It will be given in the balance sheets. Is not it? Balance sheets. It may be the asset side or it may be the liability sides. So whatever the liability side it is given, that all of you know, all these liability sides balance sheet is credit balance. And to transfer to the another account in partner's capital account or current account, wherever you are going to transfer, then all this credit balance you have to make it a debit. So automatically it will be closed. So that it keep in mind that reserve account debit, investment fluctuation fund account debit, workman accident compensation fund account debit, profit and loss profit. All this is not given, only 4 are given. It may be so many things are there. So that will already you know. Investment fluctuation fund is there, or the workman accident compensation fund is there, or any other fund if it is given. This all the fund which is the owner of this firm, that are the money you have to transfer to the partner's capital account. So this all liability is the credit balance, we make it a debit. Reserve account debit, investment fluctuation fund account debit, workman accident compensation fund account debit, profit and loss account debit to partner's capital account. This is that journal entry for transferring the credit balance. Similarly, the debit balance also may come. That I told you that few of the journals you already know. The debit balance of the profit and loss account, the debit balance if it is there, that we have to make it a credit. So partner's capital account debit to profit and loss account or any other things, though it is not given, or any other things if it is there, that also you have to do. That is that about advertisements, campaigning expense or any other expense if it is given. So partner's capital account debit to profit and loss account. That is under 1A and B. Next is coming the point number 2. When assets are closed and transferred to the realization account. I told in this chapter you have to open one account which is called the realization account. Previous 2 chapters you have opened the revaluations account. Here you have to open the realization account. Profit and loss adjustment account is the another name of revaluations account. Don't be so confused. Profit and loss adjustment account is the another name of revaluations account, and this is realization account. These are not same. So you have to open the realization account where you have to transfer all the assets from the asset side except cash and bank, and all the liabilities except few. Capital account, current account, partner's loan account, like that. So first we are going to transfer all the assets. All the assets whenever you are going to transfer, this is not assets. First entry which you passed, that is not asset, that is called accumulated reserve. Now we are going to transfer all the assets. All of you know assets is debit balance, we have to make it a debit, we have to make it a credit. To close that one, we have to make it a credit. So to whom we will make the debit? The realization account. That is the things which you have to remember. So realization account debit to land and building, to plant and machinery, to furniture, to investment, to debtors, to bills receivable, to other assets. So keep it in mind. So all the assets whenever you are transferring, all the assets account will be credit and realization account will be debit. Here few of the assets are name is given. So according to your question, whatever the assets is given, that assets you will make it a credit. Now that is 3A. When accounts of the provisions are closed and transferred to the realization account. Accounts of the provisions are closed. Provisions, where it is there, obviously it is in the liability sides. Just like that, bad debt reserve, depreciation fund, discount reserve on debtors. Sometimes you have seen the bad debt reserve, it was deducted from the debtors in the asset sides, but deducted from the debtors in asset sides meaning is writing in the liability sides meaning are same. So these all are the liability side is given, so all are credit balance, so you have to make it a debit. So when accounts of the provisions are provisions, this is provisions, accounts of provisions are closed and transferred to the realization account, that time bad reserve account debit, depreciation fund account debit, discount reserve on debtors and bills receivables account debit to realization account. So one account if you know, the another account will be the realization account. Now the 3B, when the liability account are closed, now all of you know, and transfer to the realization account. If when assets is closed, that time you made the assets account credit, and if you are going to close the liability account, because liability is credit balance, you have to make it a debit. So all the liability account debit to which another account is realization account. So creditors account debit, bills payable account debit, bank overdraft account debit, workman profit sharing fund, workman compensation नहीं, workman profit sharing fund account debit, outstanding expense account debit to realization account. So one account you are getting, another account is realization account. Question already it came in your mind, sir, why it is not given all the assets in the liability sides? I told you some of the assets, all the liability in the liability sides, because some of the liability you no need to transfer to the realization account, because some of the liability without transferring to the realization account directly we will do the payment we will do directly. For that no need to transfer particular certain liability to the realization account. For that only the creditors, bills payables, bank overdraft, workman profit sharing fund and outstanding expense, these are the given. Here noted is given, since the settlement of the partner's account is to be done, the capital account of the partner, current account of the partner, capital account of the partner also comes in the liability side, current account of the partner also comes in the liability side, loan account of a partner are not transferred to the realization account. Their accounts are separately open. These accounts will be separately open and the balance are shown in their it. At last these accounts are closed in this dissolution. So personal account if it is given, that will not transfer. Next, now all the assets and all the liabilities, where did you keep? Now all the assets and all the liability you kept in one room. Where? This is called realization account. Now if you want to sell any assets or if you want to pay any liability, that from that room it will go out. This is the questions. Now when assets are sold, if assets are sold, that time cash account debit to assets you don't write, because assets already you have closed. And this all assets, where did you transfer? These all assets you have transferred to the realization account. So now all this entry, either you are paying these assets, selling these assets or paying the liabilities, that every entry you have to pass through realization account. So when assets, sale of assets, cash account debit to not assets but realization account. Cash account debit to realization account. If I give one example so that you can understand that one. Suppose you want land and building, where you transfer it is here, suppose 1 lakh. It is your book value. This you all you transfer according to your book value. Whenever you are transferring all these assets and liabilities, that is book value. And after that they said that one land and building, it is sold in 1,20,000. So 20,000 is your profit. Now what is getting? The cash account debit to realization account. Realization account को आपने credit कर दिया, तो automatically the cash account debit to realization, here you wrote it here, realization account debit to land 1 lakh. Realization account debit to land 1 lakh. So realization it was debited by 1 lakh. Now due to this transaction, realization account was credited by 20. So automatically 20,000 credit realization balance will be there. Similarly, if it is loss, then also loss will come. So whenever you are selling the assets, that time cash account debit to realization. Don't write cash account debit to assets. When assets taken over a partner, sometime it may happen that one of the assets one partner told that don't sell, I will take it. Or sometime it may happen the partners may take the assets, partner may take the liability also. So what journal entry you will pass? I told you in section A MCQ or in section B 1 or 2 line questions answer, it may question come. What journal entry you will pass if partner A is taking these assets or if partner is taking this liability? The book value is this and in this amount they are taking. Like that question will come. So you keep in mind the 2 points I will tell you, that is the most important. If partner, that point you keep it mind, if partner is taking assets, if partner is taking assets, the partner's capital account will be debit. If partners is taking assets, partner's capital account will be debit and left is realization. If partner is taking liability, then partner's capital account will be credit, the left is realizations. So 2 accounts you have to open, you have to find out, one is debit, another is credit. Out of that one, if you remember, the another one will be the realizations. So once again I want to tell you, if partner is taking assets, partner's capital account will be debit. If partner is taking liability, partner's capital account will be credit, left is realizations. So when assets taken over a partner, then respective partner's capital account debit to realizations, I told you. And when the income is received from unrecorded assets, the second point it is there, that will come with afterwards. When income is received from unrecorded assets, you have to know what is the meaning of that. Unrecorded assets का meaning क्या है? Unrecorded assets मतलब some of the assets it is there in your business but it is not recorded, it has not come to the account. आपका बैलेंस शीट में वो assets नहीं था, but that asset it was existing in the business. That is called unrecorded assets. And whenever you are going to sell this business, whatever the assets existence you are having in the balance sheet, that too you are selling, but which is not shown in the balance sheet, still it is there, physically it is there. That assets if you are going to sell, that entry will come cash account debit to realizations. So profit, cash account debit to realization, though these assets you have not transferred to the realizations. When liability are paid means his income is coming, cash is debit. Liability is paid means cash is going out. So cash is going out means cash will be credit. And what is the left? Realization. Realization account debit to cash. This is cash is coming, for that cash account debit. This is cash is going, for that cash account credit. Left is realization. When liability payment is accepted by a partner, just now I told, liability payment is accepted by the partner, मतलब पेमेंट नहीं दिया, कोई liability कोई partner बोला I will pay that one, that time realization account debit to respective partner's capital account. If partner is taking the liability, the partner's capital account will be credit. If partner is taking the assets, partner's capital account will be debit. Left is realization. When unrecorded liability is paid, this is unrecorded assets. This is unrecorded assets. Now unrecorded liability. When unrecorded liability is paid, then realization account debit to cash. Cash is going out. These are the entry you have to keep in mind. This on the basis of this entry, and you have to remember this entry. Twice you read this entry, automatically you will understand. And on the basis of this entry, the practical sums I will discuss. When the dissolution expense of a partnership firm is paid, now for dissolution expense, you have to know what is called dissolution expense. But to close down the business, to sell the assets, you have to pay some amount, that is called dissolution expense. To dissolve, some of the money which you paid for to dissolve is called dissolution expense. When the dissolution expense is paid by the firm and to be borne by the firm, that is realization account debit to cash. Realization account to cash is going out, so cash credit, realization debit. When any partner accepts the liability, I told you कोई partner लाइबिलिटी लेने के लिए राजी है, दैट इज कॉल्ड रियलाइजेशन अकाउंट डेबिट टू respective partners capital account. I told the two things you will keep in mind. Most of the times these two questions are coming. If partner is taking the assets or if partner is taking the liability. Realization account debit to respective partners capital account. Now when the responsibility of the payment of the dissolution expense is accepted by a partner but payment is made by the firm, in this case the following journal entry will be passed. Respective partners capital account debit to cash account. Sometimes it may happen that particular partner is taking that one, the dissolution expense is accepted but payment is made by the firm. That time respective partners capital account debit to cash. Now 7, when loan of a partner is paid, that time realization account is not coming here. You see here it is given loan of a partner. This is loan of a partner. When loan of a partner is paid, that time partner's loan account debit to bank. Already question came from your mind, sir, why it is not there the realization account? Because when I taught you that time transferring this one, I told you that partner's loan or the capital account or the current account, it was not transferred to the realization account. It is directly payment was done. So partner's loan it was credit balance. We have to make it a डेबिट क्लोज हो गया एंड कैश पेमेंट हो गया. रियलाइजेशन अकाउंट में ये ट्रांसफ़र नहीं किया था, इसलिए ये एंट्री रियलाइजेशन थ्रू पास नहीं हुआ. पार्टनर्स लोन अकाउंट डेबिट टू कैश एंड बैंक, डायरेक्ट एंट्री. पार्टनर्स लोन क्लोज हो गया एंड कैश हैज गॉन फ्रॉम द बिजनेस. You have not transferred this partner's loan to the realization account. For the realization account it has not come. Distributions of the balance of the realization account. Now after continuing this all, at last, like the revaluations account of chapter 5 and chapter 6, then you have to close the realization account. And to close the realization account, sometime it may come profit or sometime it may come loss. If assets are sold more than the book value, then profit. If assets are sold less than the book value, then it is loss. Sometimes if expense are more, income are less, automatically loss comes. So if profit comes, then realization credit balance will come and you have to make it a debit balance. Realization account debit to partner's current account. Partner's current account में transfer करना है. If loss is there, then partners, if one entry you know, the another entry automatically will come to know. If profit comes, realization account debit to partner's current account. If loss comes, the partner's current account debit to realization account, reverse entry. When partner's current account are closed, now current account we have transferred the realization balance, and now we are going to close the current account, and that current account we have to transfer to the capital account. So keep it in mind, realization profit you have to transfer to the current account, and current account balance you will transfer to the partner's capital account. When current account shows the credit balance, then partner's current account debit to partner's capital account. Current account you may have the debit balance, current account you may have the credit balance. If current account is credit balance, you have to make it a debit. Partner's current account debit to partner's capital account. When current account shows the debit balance, if it is debit balance, you have to make it a credit. So partner's capital account debit to partner's current account. So what I told you, realization balance first will transfer to the partner's current account. Current account balance you will transfer to the partner's capital account. Realization account, it may be profit, it may be loss. Current account, it may be the debit balance, it may be the credit balance. When partner's capital account are closed, at last you have to close the partner's capital account. And partner's capital account when will close? When closing balance of the partner's capital account is debit balance and the partners bringing the cash. Sometime it may happen that there is a shortage of cash is coming. Matlab capital account it became the debit balance. That time entry will come cash or bank account debit to partner's capital account. Because partner's capital account, if it is a debit balance, rarely it may not come. But sometime if it is coming, then we have to make it a credit. That means this is the meaning of that. They are bringing the cash from the outsides, from their personal pocket, from their home. That time cash or bank account debit to partner's capital account. And when the closing balance of the partner's capital account is credit balance and the payment is made to the partner, that time partner's capital account debit to cash and bank account. If it is a credit balance, then you have to make it a debit. That means they are having the excess cash that they are taking, and this is they are bringing the cash from home. They are taking the cash at home. All accounts will be closed after incorporating the above mentioned the accounting treatment of the dissolution firm. And the last one is coming, the accounting treatment of the special transactions. When unrecorded assets are given to the unrecorded creditors for his dues. Sometimes it may happen that unrecorded assets which is not recorded in your book, that you have given to that unrecorded creditors. Unrecorded assets are given to the recorded creditors. Sorry, when unrecorded assets are given to the recorded creditors. Yes, unrecorded assets are given to the recorded creditors. That time you have to understand what is this. This is the most important. That also it may come. What is said? The assets which you are giving, that is unrecorded, to whom you are giving to the recorded creditors. If you give the example, you can understand. In this kind of circumstances, the total amount of the creditors, that amount of unrecorded assets is debited, and the remaining amount of the creditors is paid to them. As per example, there are the total creditors is 90,000. How much amount you have to pay to the creditors? 90,000. One unrecorded assets is given to the book creditors of rupees 50,000 against his due. Actually what happened? You have to pay total creditors 90,000, but you have given one asset which is not recorded in your book, that was 50,000. So how much you are paying to the remaining to the creditors? 40,000. Actually 40,000 you are paying to settle down the account. So you have to pass the entry for 40,000, not that 90,000. Realization account debit to cash. That time that type of entry will come in practical side. I will go in details. Unrecorded assets, money you are not taking in the business, directly you are giving to the creditors. तो creditors को 90,000 देना है, उसको अंदर 50,000 unrecorded दे दिया, तो मतलब 40,000 you are giving from the account. When the partial payment is made for the unrecorded liability through the unrecorded assets, that also you will get it. I will go through in details about that one. That time realization account debit to bank it will come. If we give the example so that you can understand. 40,000 is payable to Amul but not recorded in the books. The unrecorded assets of rupees 20,000 is given to him. 40,000 are payable to Amul but not recorded in the books. It was not recorded in the books. Unrecorded assets of 20,000 given to him and the remaining amount is paid by check. So उसको 40,000 देना था, which is not recorded. But 20,000 which you have given, that was not recorded. But 40 का अंदर 20 payment हो गया और 20,000 cash you have given. For that realization account debit to bank. How much you paid, how much amount it has gone from the business, only that entry it came. Now page number 286. Page number 286 on your textbook, one specimens of the realization account is given. That I want to explain it. This is the realization account. This first entry, all this is transferring the assets of your book value. Realization account debit to sundry assets, land and building, plant and machinery, furniture, investment, stock, bill receivables, other assets according to the this all book value. Realization account debit to cash. If you are paying any amount, payment of liability, cash is going, cash credit, payment of liability, realization account debit to cash. Liability accepted by the partner, realization account debit to partner's capital account. Liability accepted by partner, realization account debit to partner's capital account. Payment of unrecorded liability, realization account debit to cash. Payment of dissolution expense, realization account debit to cash. Then the remunerations of the partner, realization account debit to capital. Then distributions of the profit of the realization account, that is realization account debit to partner's current account. Similarly, these sides, all the provisions first you transfer. So all these provisions, bad debt reserve, depreciation fund, discount reserve on debtors, bill receivable account debit to realization. This side realization account debit to this. decide this account debit to realization. Sundry liability, that is creditor, that is transferring. Creditors account debit, bills payables account debit, bank overdraft account debit, workman profit sharing fund account debit, outstanding expense account debit to realizations. Similarly, sale of assets, cash or bank account debit to realizations. Assets taken over a partner, partner's capital account debit to realization. I told if partner is taking the assets, the partner's capital account debit. If partner is taking the liability, partner's capital account will be credit. Sale of unrecorded assets, cash or bank account debit to realizations. At last, distributions of the loss of the realization account, that is partner's capital account or current account debit to realization account. These are the main things which I told you. Practical sides before reaching the illustration 1. Illustration 1 I will explain one by one. So all these points before reaching the illustration or the practical sides. The theoretical part from this chapter I explain in details. You try to understand everything one by one all. And that most important is the entry, what I told you, 11 entry, that is page number 279, I think so. Yes, page number 279 to page number 285. All this entry you go through once again, twice. If you do not understand, you can tell me. Hope you are understanding. Okay, all the best. Bye.